foreclosures bloodbath deepens as banks seize 40,000 homes in just 1 month, and the pain is only beginning. 40,000 in 1 month. Let's see.
Whoa! So Patrick, is that the real data? So I watch Patrick David every day, and I really love a lot of the content that he has. But then over the weekend, he came up with this video, and I'm sitting here thinking, okay, am I missing something? I do this for a living, and I'm not seeing foreclosures running rampant, especially like they were in 2008. So in this video, we're going to talk about how bad is foreclosures, because if you look in mainstream media, if you look through here, some of these guys, they just make a living off this stuff. But if you look at mainstream media, you can go through here, and now it's once again, okay, foreclosures are just rapidly rising out of control. So are they? Should you sit on the sidelines, especially in some of these areas, to see if you can get a great deal on homes? Well, you might be disappointed at the end of this video, but I want you guys to do your own research. So folks, my name is Dan Frio. I'm the host of the Rate Update. I'm also a licensed mortgage loan officer, licensed in all 50 states, as well as Puerto Rico. If you're out there needing help looking to buy or refinance your home, I'd love to help you. I'll give you all my information at the end of this video. You're here for these. So let's get to it. So foreclosures. I'm not getting it, folks, because here's what happened. You have to understand what happened in 2008. But let me get to some of the numbers here for you in a second. But we're going to go through some of these states to show, okay, some of these states were well expected that it was going to be a bad housing market. But if you go over to here, the delinquency. So here's what I don't get. All these people are coming out right now saying the housing market's crashing, the foreclosures running out of control. Here's the historical numbers we have, folks. So yeah, here's what happened in these times, and I'm not saying it didn't happen. These were the worst times in my lifetime when it comes to lending. And this is one of the reasons why I also watch Patrick David over here. He was in the kind of in sales. And him and his buddy, he went to the insurance side of the business, and he had a friend go into the mortgage side of the business. He was a mortgage broker. Check out some of the videos he has. He's like, his mortgage broker buddy was making tons of loans in these time frames right through here on what's called Nina loans. Okay, so if you want to understand what really happened back in these times and why hopefully they'll never happen again, let me briefly go over what happened during 2008 to 2010 and why they were really detrimental when it comes to the housing market. There was an introduction of a new loan product that was called Nina. It was a no income, no asset. Think of it that way. If you got good credit, you didn't have to prove your income and you didn't have to prove any of your assets. Okay, they have them around today. But the problem was back then, you didn't have to put any money down. You could finance 100%. Okay, nowadays you can get those loans. You need to usually put down 15, 20%. You need some skin in the game. So what happened during this time frame is people got into loans they didn't otherwise qualify for. But here's the bad part of it. Okay, they would get a loan, and it would be some adjustable rate teaser thing. And here's what I mean. It would be an adjustable rate. Okay, so that's kind of bad enough in an environment where maybe rates might be going up. But then it gave you this teaser rate. It was like 2% below market rates. And it was an adjustable rate. So usually adjustable rates are lower than fixed rates anyways. Then if you got a rate that's 1 or 2% lower than that, you're like, I'm golden. I can afford this house, even though I really can't afford it. So millions of people were buying properties. Okay, that happened for a couple of years. And then what happened is those teaser rates started to adjust. And that was during this time frame right kind of through here. Everybody's buying. And then all of a sudden, people would refinance because their home equity kept going up and up and up. Okay, remember during those times, everybody had to buy a house because if you bought a house, you're going to be rich in 10 years. Well, everybody bought a house. Okay, then those payments then adjusted. It might be 2-3 years later. But those payments would double. Sometimes they were triple. Yeah, they were triple. So then people would say, okay, well, I'll just get back into one of these Nina loans again, get one of those payments. I can at least stay in my house, and the house keeps appreciating, so I can refinance, use my equity to do that, so I'll do it again. And then a couple of years later, I'll do it again. What happens is the housing market kind of topped. Okay, so now the housing market flattened and started coming down just a little bit. Well, the people came in and they're like, okay, 2-3 years later, it ballooned again. Their house payment doubled. They went to refinance and they're like, you can't refinance now because you don't have enough equity in your home. And they're like, oh boy, I don't have any equity in my home. I can't refinance. I can't afford these payments. I never could afford these payments because I knew back then those payments too much. But if I got this program, I could qualify for. So that's what happened. So now you have millions of people's mortgages that started adjusting. So now you got massive people just dumping their homes because house prices are dropping. People are like, I got to sell before I'm upside down. Well, it just kept dropping. House prices in some areas were down 60%. 60%. So people are like, just take my home. That's what happened. Well, those, like I said, those products are still here, but you have to have skin in the game. You have to have money down. And you don't have these just crap loans available anymore. And you don't have those complete teaser rates available anymore. So you eliminated all those products. So then what happened is during COVID, which happened was you had what they call forbearances and things like that. And you also couldn't foreclose. So now if you see a chart that comes out and says, okay, foreclosures are up 300%. Well, if you have 300% from nothing, well, it's shock and all. So let me just go over the factual numbers for you. So in 2008, there's 2.3 million homes that were in foreclosure. That's basically 1 in every 55 houses. Think about it. 1 in every 55 houses is in foreclosures. Then in 2010, this is the peak of it all. 2.9 million foreclosures. That's 1 in every 45 homes. So think of it where you live. Your community is going to be engulfed with foreclosures. That's what happened. Okay, so what are you seeing today? Let me get my head out of the way for 1 second. You go, where is it today? Well, the ratio's 0.26, 367,000. 1 in every 3,500 homes are in foreclosure. So is this as bad as this? It's nowhere even close. Okay, so down through here, this just gives you some of the numbers behind it. And it is, so when I start seeing videos, and then when, I can get it when I start seeing videos, from these guys, because that's how they make a living. But Patrick, buddy, when you come in and say foreclosures are booming and booming and booming, I think as they progress through this, they said, yeah, there are areas in the markets that aren't doing too well. And let's go to those. Okay, so I've been predicting for the last 2-3 years, house prices are going to be flat as a pancake. And then you're like, okay, well, Austin's crashing, Florida's crashing. Well, yeah. But if the housing market in general, I think last year and the 2 years prior to that, was up on average about 2-3%. So if Austin and some of these areas are down 20%, some people are saying, well, that means other markets are offsetting that. That must be over 20%. Think of it that way. So you have some of these areas that aren't doing too well, but then again, other areas must be doing pretty darn well. So if you want some of these reports, you want to do your own fact checking, I'll have this map listed down below of some of these. These are actually coming from the Federal Reserve, folks, so if you believe them or not. And then I'll have things like this for you. And this actually goes state by state and just nails it down. So do your own research when you're out there. If you're looking to buy a house in 2026, or you really want to understand what's going on in the housing market, you really have to know your history and the whys behind things. So folks, if you're out there and you need some help with a refinance, maybe you bought a couple years ago, you're at 7-8%, I'd love to be able to help you out. Or you might even be looking to buy in 2026. So my name is Dan Frio. I'm the host of the Rate Update right up through there. If you're a homeowner, plug in your mortgage information right up to there. It says RateWatch 2.1. Here's what I want to know. At what rate you're interested in refinancing, and how much of a monthly savings would you be interested in looking at those two aspects. So if your rate hits this or your monthly savings hits this, I'll call you, text you, and email you. I don't sell the data, folks. It's me watching these things. If you're looking to buy a house thinking, okay, can I afford a house in this market? Are home prices even good? Are they going to crash? Well, once you decide that, I'd love to be able to help navigate you to home ownership. So reach out to us for a consultation, put in your application, but please watch some of the 7,000 videos I have down below. Don't forget to subscribe over there and join me each day, because I come in each day to explain mortgage rates to you, mortgage programs, and the whys behind what's going on behind the scenes. And I also try to give you the facts and nothing but the facts. And that's why we call it the Rate Update, but the acronym of that is TRUE, TRU, where I want to be truthful to you guys every day so you can understand really what's going on in the real estates and the whys behind it, folks. So thanks for watching. God bless. Have a fantastic day. Hopefully you had the day off. And I will see you tomorrow, how the market opens and where mortgage rates and the housing market's going to go from here. So thanks for watching, guys. Have a great day. Stay warm out there. It's actually going to be 60 degrees in Chicago. I might go bike riding later this afternoon. Have a good one, folks. Bye-bye. See you tomorrow.